Global markets are threading through mixed signals, record-breaking optimism from crypto, renewed friction on the global trade front, and consolidation moves in biotech. Investors are toggling between risk-on euphoria and the fear of policy whiplash as new tensions arise. My name is Eniola Lunge, and here's today's Zoom Out for July 14, 2025, where I help you see the bigger picture. President Trump announced that the U.S. will implement 30% tariffs on imports from both Mexico and the European Union, effective August 1. This follows a pattern of the Trump administration escalating trade tensions with earlier threats targeting Canada, Japan, South Korea, and the Philippines. According to Reuters, the EU has delayed retaliatory action, choosing instead to enter talks and seek a negotiated solution before the August 1 deadline. Similarly, Mexico has indicated it will work to reach a trade deal before the deadline, focusing on security and combating fentanyl trafficking, according to FreightWaves. Economists warned that this escalating trade war could introduce stagflationary risks into the global economy, potentially slowing growth while keeping inflation stubbornly high, also complicating any moves by central banks to cut rates. So what's your Zoom Out takeaway? Particular concerns are emerging in the auto, agri-food, and manufacturing sectors, industries that make up the bulk of global trade. This latest round of tariff threats underscores that protectionism is indeed back on the ballot, with ripple effects extending beyond the political arena. The rising policy uncertainty also contributes to increased costs of doing business globally. Bitcoin reached a peak of $123,000 today, driven by substantial institutional demand and the momentum generated by pro-crypto legislation during the U.S. Crypto Week in Congress. Bloomberg reports that Bitcoin ETFs continue to attract significant capital, with last week seeing $3.7 billion in inflows across crypto ETFs, the second highest week on record. Bipartisan bills like the Regulating Stablecoins and the Defining Digital Assets regulations are making progress in Congress, potentially bringing greater legitimacy and regulatory clarity to the crypto space, according to Al Jazeera. This positive sentiment fueled a rally in crypto-exposed equities and impacted broader risk assets. So what's your Zoom Out takeaway? Amidst volatility in traditional markets due to factors like trade wars and political shifts, crypto is increasingly being seen as a modern hedge against, with institutional investors actively participating in the market and contributing to its growth and stability, especially with the potential for a U.S. strategic Bitcoin reserve. In a major healthcare shakeup, Waters Corp and BD's Biosciences unit announced a $17.5 billion merger aimed at creating a life sciences powerhouse. Waters stock dropped nearly 14% on the announcement, its lowest level in over a year. Investors are worried about share dilution, $4 billion in new debt, and the usual integration risks that come with large-scale measures. Some analysts also cite concerns over potential cuts to U.S. government research funding, which could weigh on future diagnostics demand. The merger is expected to streamline diagnostics, lab tools, and biosciences into one vertically integrated platform. So what's your Zoom Out takeaway? The consolidation could pressure smaller diagnostics players and drive further M&A activity in the space. Starbucks has announced a new return to office policy requiring corporate employees to work 4 days a week in office starting in October. This marks an increase from the previous 3-day requirement. The new policy also requires corporate people leaders to move to Seattle or Toronto within a year, offering a voluntary exit package with a cash payout for those who do not relocate. This decision is part of the company's turnaround plan, as CEO Brian Nicole believes in-person collaboration is essential for cultural revival and business success. Investors are observing the situation for effects on labor morale and retention, especially since some competitors still offer hybrid flexibility. So what's your Zoom out takeaway? The debate over workplace flexibility persists, with Starbucks among companies prioritizing in-person collaboration to regain momentum. This move by Starbucks reflects a larger trend of companies reducing remote work options. The China Development Bank and the Development Bank of Southern Africa have signed a $293 million loan agreement to support infrastructure development across Africa. The funding will target projects in sectors such as infrastructure, energy, information and communications technology, water, health, and manufacturing. This agreement, signed during the annual BRICS Interbank Cooperation Mechanism meeting in Brazil, represents the first financing cooperation between these two banks and aligns with China's broader strategy for South-South cooperation and its Belt and Road initiative in Africa. So what's your Zoom out takeaway? This funding has the potential to unlock new infrastructure projects across Africa, potentially providing opportunities for regional contractors and further expanding China's role in the continent's development financing. So the bottom line is this: while the US flirts with tariffs and volatility, capital is on the move into crypto, into infrastructure, into consolidation plays that anticipate a fractured but high-stakes global economy. When the world zooms in on the noise, I zoom out so you can see the bigger picture. Which of the stories have you been following? Drop your take in the comments and don't forget to subscribe.